Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz, as we get everything you need to know in 90 seconds at 9 o'clock with new central bank interest rate decisions, which are upon us this week, have a new challenge. OPEC's unexpected decision to cut supply has changed the calculus on how to deal with inflation, which has been on a downward trend as central bank-induced slower growth has eased price pressures despite the war in Russia. But this supply cut is again raising oil prices. It looks like we'll generally keep the lower growth, but the benefit of lower inflation has been pushed away. Globally, there were many manufacturing PMIs out overnight, and they paint a picture of a sector that is neither expanding nor contracting. Output is rising as new order intakes are still weakish, but show signs of stabilising. In the US, there were two PMI reports out overnight, and both recorded contractions and greater than the overall global rate. And Canada's factories slipped back into contraction in March to about the same level as its southern neighbour. In China, in a telling release, the private Caixin PMI for March revealed that the February factory expansion wasn't sustained into March. And it does call into question the official factory PMI released late last week, which was quite upbeat. And India reported a good expansion in their manufacturing sector. And the EU PMIs are still contracting, but factory output rose slightly and input prices fell in March amid a survey record improvement in suppliers' delivery times. Greece, Italy and Spain led the countries with expansions, but it was Germany, the Netherlands and France who weighed on the overall result. Later today, the RBA will review its official policy rate, currently at 3.6%. Australian inflation is running at 6.8%, but falling. Until the end of last week, most analysts were expecting another 25 basis point rate hike, even if it was to be the last of this cycle. But those analysts have flipped this week, and most now expect no change. The US Treasury 10-year yield starts today at 3.43% and down 4 basis points from yesterday. And the price of gold will open today at $1,984 an ounce. That's up $14 from yesterday. And oil prices are up $4.50 at just on $80 a barrel in the US, while the international Brent price is just under $84.50 a barrel. And the Kiwi dollar is firmer against the US dollar, now at 62.8 US cents. Against the Aussie, we're a full 1 cent lower at 92.7 Australian cents. Against the euro, we're unchanged at 57.7 euro cents. That means the trade weighted index is now at 70.5 and only 10 basis points lower than this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.